The last time we saw an unemployment rate this low was 18 years ago, and interest rates were meaningfully higher. So there's this generational divide. Rates are very, very low by historical standards. It's actually very supportive, despite the fact that the Fed is normalizing interest rates. But I think, when you look at the China situation here, again, worst fears not materializing. We don't have this great positive story yet, but where the president is insinuating that we have good news to come. We have to assume that this is not the trade war that everybody was so worried about. Instead, it's a trade conversation. We're having a conversation with a big trading partner. We're going to make a deal. That you've got the deal maker in chief. He's going to make a deal. We don't know the specifics of the deal, but we hope that our worst fears are not materialized, and the market's very optimistic. And then finally, Apple, right? I mean, everybody said, oh, Apple, it's going to be a terrible earnings quarter. The worst is going to come. No one's going to buy these expensive phones, but good news comes. My daughter, huge Apple fan. She wants to only own the stock, only own the products. The people are still out there. We don't have too much tech, despite the fact that I think we do. Of course, intellectual property is a major issue, but when you see the market reflecting optimism on trade, it's also the fact that in this global economy, we're seeing capital repatriated, coming back from overseas in this global trade economy. Apple alone going to pay $38 billion in taxes, bringing back hundreds of billions of dollars to the domestic economy for plants and equipment here, moving from places like China to the U.S. So I think this whole conversation is actually very optimistic, and it's a very pro-growth business backdrop, but there are going to be consequences when you play tough with a difficult trading partner like China.